Well, let's use that and talk about specifically what Inside Options offers. So you're talking about it's the stock to watch.
Yep.
In the morning?
That's our first thing. The stock to watch comes out at, like I say, between 5:45 and 6 a.m. in the morning, Preston. The next thing that comes out is our midday update, where we're trying to cite unusual option activity. Doesn't happen every single day. So at first we tried to publish something every day because we talked to Reuters and Bloomberg and Dow Jones and CNBC, the Wall Street Journal guys, and that's all good. But not every single one of those is a trading catalyst that's going to be, I mean, frequently customers would say to us, Preston, well, what does this mean? Yeah, there's unusual option activity in Taser, or unusual activity up in Cisco or Yahoo. Doesn't always give them a clear picture. What we've done now is we're refining that down to where not only do we give, hopefully several times a week, unusual activity reports, but also an option trade as the premium part of the service, where you get an option trade where they're taking a limited risk trade, and they're not going to lose their shirt if they're wrong. They're only going to lose this small amount of money that they've put on with this option.
Your favorite kind of trade, the bull call spread?
Bull call spread.
Buying a call and then selling one on top. And
exactly right.
Like that. Okay. And I'll tell you, some of the most exciting things for me, and this just happened a few weeks ago, the South Trust announcement. And I mean, it seems like, I don't know, for me, the most exciting thing is seeing this unusual volume. I don't know what it is, John, but after trading for 10 years, I mean, you look for every edge, I mean, that you possibly can. I mean, you study charts, you study fundamentals, you're comfortable with the sector. You're seeing your stock like eBay, if that's your baby, on a pullback. You almost feel that it's going to come, but you don't really know on that chart what it's going to do the next day. I mean, and you try to find any edge you can, and sometimes you see these. Martha Stewart's doing what she's doing, with that ImClone stock, you're like, you know what, if that could just be legal, if you could just know it was going to go up or it was going to go down in the future, but you always come back, it's like you can't do it.
Right.
And, what you've seen over your 23 years, of this greed that comes in and hits these particular options, and you talked about it earlier, I thought this was really good. When you see a particular option getting all of a sudden just fresh attention. You've got a month associated with that option. You can see the strike price that these players are playing. So, for example, on a $37 stock, if all of a sudden you see the next month out option that expires next week, let's say, and it's the $40 call that they're trading, no one in their right mind would buy a week out of the money $40 call on a $37 stock.
Right.
But if you saw the big block volume coming in like that really tips you off to something. I mean, first of all, something's going to happen in the next week. Or otherwise that smart money is going to just evaporate into a puff of smoke. They're going to lose their money. And that's usually not what their game is. That's
one of the keys you're getting to right there, Preston, is what kind of volume is triggering our alerts. I mean, is it, folks, that we're seeing, little guys coming in, not that I'm against little traders, but if you're seeing little folks come in, for instance, coming through E-Trade and Schwab and things like that, buying 5 lots and 10 lots, does that mean anything? No, it means nothing to me. What I'm looking for are institutional players. I'm looking for 200 to 500 contract blocks, because that represents 20,000 to 50,000 shares of stock. When you see something like that, that's when you know something's going on.
Well, let's talk about that South Trust then, because it was just most recent, that SOTR. Now, this was a small regional southern bank. I believe it was out of Alabama or something like that.
Yep, down and out of Atlanta, I think, or something like that.
And so what do you remember the kind of action you saw on that one?
Sure.
Because it's not a household name stock. I mean, it's a regional bank stock.
Right. We saw unusual activity, folks, in SOTR, South Trust, and called a couple friends on institutional trading desks. They said there were rumors, but the rumors had been around for a while, and that they didn't see anything unusual in the stock. Well, we told them we were seeing very unusual activity in the options. In particular, we saw options, the out-of-the-money 35 and 37 calls that were trading in 10 times, 20 times, as much as 200 times the normal volume for that stock. In other words, maybe for a given week, South Trust options trade like 3,000 or 4,000 contracts, and we're seeing it trade like 10,000 or 15,000 contracts in a single day. You're seeing that, Preston. You're seeing institutional money being laid down. It's like being at Vegas and all of a sudden, if, like I say, I always want to move the odds into my favor. I mean, I have a couple credos that I always follow. One of them is, let me move the odds into my favor as much as possible when I'm investing. Also, follow the money. When I'm seeing the big players put down big money on stocks like South Trust, I think I know something's going on. I want to piggyback with those guys and get in on that trade. And again, you're taking a limited risk shot because you're playing where the smart money is playing. And it's just one of the ways that we try to use that activity to take advantage of what the market's doing. And like I say, the difference between Vegas and Wall Street, Preston, is they don't shuffle up on Wall Street.
And so when you do say that, do you imply that, I mean, on this SOTR, this South Trust, would you, I know you don't advise anyone how big to trade or how many contracts to buy. You're simply providing information, unbiased. You know, you're not tied to any banking relationships or anything. You're just providing the information. But in your opinion, when something looks, and I know nothing's a sure thing. I mean, there's Murphy's Law.
Yeah.
There's just, I mean, weird stuff that just sometimes can happen. It is the stock market. But when you do have the greed coming into a play, and it's a specific strike price, and it's just lined up there.
And a specific time frame.
And specific time frame. You, in your own trading account, would you go bigger on a trade like that versus something else that maybe a chart looked good and you were going to...
Yeah, it's my favorite type of trade.
Okay.
My favorite trades are the unusual activity, just like you, because there's something where I'm piggybacking on somebody who's got a greater access to information. I'm not saying illegal. Mm-hmm. In some cases, some of their access might be a little questionable. Mm-hmm. But I have no idea. You have no idea, Preston. Really, nobody has any idea who these people are that are buying. We just know that there's unusual activity there. It's coming from somebody big because they're not buying 10, 20 contracts. Mm-hmm. They're buying 200, 500 at a clip. Right. So those are people that I want to be on the right side of the market with those guys. So like I say, the time frame that's happening, that's important to me. Are they trading the near-term options or the mid-term options? Mm-hmm. And which strike prices are they buying? Because if they think the takeover is happening at 40, they're not going to be buying the 40 strike calls because those are going to be worthless. They're going to be buying 35s, 37s for a stock that's trading 33, like in that South Trust example.
That's interesting. And what also brings to mind is you've seen unusual activities on companies that somehow find themselves on the front cover of Barron's over the weekend with a positive slant, meaning the stock's going to open up higher on Monday.
That's Nokia. I mean, that's less than a year ago, Preston. All of a sudden, we noted, folks, very unusual trading activity in out-of-the-money Nokia calls. Motorola.
Why would that happen?
Yeah, Motorola just got downgraded. The sector was getting hit. Why were people buying out-of-the-money Nokia calls? Nobody could figure out. And I said, well, somebody thinks there's going to be some positive news on Nokia in the very near term because, again, they weren't buying the 3-month out options, Preston. They're buying the 1-month out options. That gives those buyers less than 30 days to be right on the market directions. They're telling you, we think good news is coming, and it's coming fast. Well, like you say, what was that good news? Cover story of Barron's. Very positive story about Nokia, about the outlook for all their handhelds. Stock jumped from like 14 to 17. Now that's a $3 move in the stock. It might not seem that spectacular, but again, think of what you could do with the options. If you see that unusual activity, stock moving up from 14 to 17 is a $3 pop. Yeah, that's a nice return, but what about the guys that bought the 15 calls, Preston?
Just cheap.
Yeah, paid 75 cents or $1 for those, only to see those things being worth $2.50, $3. I mean, when you can make 200 or 300% on your money and have the rest of your money just sitting over there in T-bills or, in other safer investments, those are the types of plays I think people like.